All right, everybody. Stock market's down again, 2 days in a row. Stocks are down Monday and Tuesday. Today, they're down a little over 300 points so far. And this comes off of a few things. We're going to talk about some deals in the marketplace. I'm going to give you my opinions of what's actually going on and how this is going to progress. And then we'll talk about what you should do. So let's look. Today, stock's down second day. 300 points is what we're down so far today on the Dow. We can see here it's off of some large remarks from Fed Chairman Jerome Powell. While the economy response has been both timely and appropriately large, it may not be the final chapter, given the path ahead is highly uncertain and subject to significant downside risks. What does he mean by this? Well, we'll get to that here in just a little bit. But remember, job losses keep coming in. This Thursday, we're going to have another probably 3 million plus job loss. April recorded 20.5, the largest ever in history. The country, though, is starting to open up, but again, we'll go through that here in a little bit. Trump also went ahead today and warns that rich guys could be talking down the stock market to profit. I think this is just disassociation with reality, to be honest. I'm not overtly against Trump in any way, form. I want the best. And in fact, I voted for him. But I think this statement here is just frankly not true. And going back here to what our Fed chairman, Mr. Powell said, we still have a long road ahead of us. At this point in time, we have no cure, we have no vaccine, we have no real treatment for people that get the virus. We have companies that have completely closed their doors now for 2+ months. We have other companies that have been operating at large losses. We have entire industries that are forever changed because of this. That's a huge risk. And on top of that, we are starting to open up. But think about it. If you get the opportunity right now to go for a cruise, go for a flight, are you going to take it? Even when it comes to eating out, are you going to eat out or are you going to take stuff to go? Are you going to be going to that movie theater, to Topgolf, places in public? Are you going to want to go to that concert when they immediately open? And I think a lot of us are going to be saying no. And that's a lot about what's going on in the stock market. Even though things are opening up, they're not really opening up. A lot of people are just sitting at home, taking it safe, trying to spend time with their family and not be part of the problem. We're opening up, this is purely opinionated right now, but we're opening up our economy back in a situation in which nothing's really changed. When we closed down, we didn't have any treatments, and we still don't really have any treatments. We didn't have a vaccine. We didn't really know a lot about this virus. Now we know a little bit more about it, but we still don't have any true treatments. We don't have any real vaccines. And in fact, more people have it currently than when we closed down by an order of magnitude. So the likelihood of a second spike, in my opinion, is next to impossible. And that's something we want to be very, very leery of. And that's something that investing in the marketplace right now can be very scary. Thinking that, possibly we could go through another shutdown and another market crash. And then Fauci goes and tells Congress today there's no guarantee the vaccine is actually going to be effective. Dr. Fauci has been just the key voice of this whole pandemic. And he's out here saying that, there's no guarantee that we have a vaccine, that it's effective, that anything. And recently as well, I don't have an article pulled up for this, but the WHO, the WHO, has been saying that there's a likelihood that if you get this virus once, that doesn't mean you're never going to get it again, that you can probably get it again. And that's because we've kind of shown signs that it's morphed in ways. There's no true science behind the antibodies actually staying and actually, being effective the second time you catch it. And that's all very scary. And it's done some crazy things. I have pulled up here the Dow. Let's take a look today. Down 300 and almost 350 points now, and we are going down. over the last 5 days. We can see here since Monday, right about here, we are down over 3% since Monday. And then if you look at the 6 month, remember we had this huge drop all the way to March 23rd. That was the low. And since March 23rd, we're up 26%. That's pretty crazy. But we can see that the momentum's starting to run out. The highs and the lows are starting to come closer and closer and closer to each other. And I think we're going to break out at some point. You know, there is a curve of the highs and a curve of the lows. And I think here soon we're going to find new lows. And it might do one of those again. We might have a W-shaped recovery, or maybe even just kind of down and holds. But we'll have to see, you know. Nobody really knows how this is going to end. If we did know how it was going to go, we would all be multimillionaires and retiring whenever this is over, right? But I think it's inevitable that throughout this week at least, we're going to see a lot of red days. Now let's talk about some companies that have taken major hits today. And I think some of them I understand, but it's also strange. Let's talk about Norwegian Cruise Lines, down 10% today, under $10 a share. If we look at the lows back here, we're getting pretty close to the two low points that they had before, and I think it's probably going to touch them. You know, I personally am not going to think about buying more Norwegian until we're down to that $8 a share mark right now. Norwegian put out a while ago that they have more than enough money to last well over a year without any income, and I think that's an easy bet. I think, you know, they can clearly get more funding to go further. They have a whole year to do it. We're working so hard on getting a vaccine. We're working so hard on finding a good treatment. It's pretty much what the entire nation is focused on right now. But I think a year from now, things really will be cleared up. And if we really look at Norwegian Cruise Line in the 2, 5, 10 year from now mark, the earnings you're going to see, the potential it has to gain, are something that is truly incredible. And down 10% for the day. That's a lot for no news being out. Let's take a look as well. United Airlines, they're also down 10%, down to almost under $20 a share. Again, if we go back to our lows, we're finding new lows here with United. Why that is, I'm not really sure. There's no really true new information on United that I could find today. People are just selling. People are scared. And as Warren Buffett said, you know, be greedy when others are fearful, be fearful when others are greedy. I think airlines will come back. I've said before, I think airlines, especially the big ones, the United, the Southwest, Delta, the big ones, are too large to fail in America. You know, back in the financial crisis, 2008 or 2011, we went ahead and we bailed out the big three automotive, Ford, Chrysler, GM, and I think if it comes down to brass tacks, we'll be doing the same thing again with these airlines. They are just too big to fail. There's too many people employed, too many other industries affected, and it's a necessity here in America to be able to travel for business, pleasure, enjoyment, whatever it is. So I really think United Airlines finding new lows tomorrow's morning is going to be the sign for me if I might buy some more United. If they start going green, if we see good news, if they put out some sort of press statement that says, hey, we're doing just fine, we're gonna make it through, whatever it is, I think that's a good sign to buy some United. You know, we are at the lowest lows. If we even go back 5 years, we've never seen lows like this. If we go back as far as we can, follow this line straight across, we're buying 2012 numbers, and even then, well, no, yeah, 2012 numbers. That's crazy to be able to buy, you know, 8 years worth of growth where the stock has gone up 356%. That's a good buy. Let's be real. You know, there's a point in Warren Buffett saying being greedy when others are fearful, be fearful when others are greedy. But I mean, this is real greedy right here. That growth, it doesn't matter if you buy it at $20 or $15. That is still greedy. So this goes back to dollar cost averaging, right? You need to just keep buying. Every time it goes a little lower, buy a couple more shares, whatever you can afford. So I might take back my statement from earlier. I might go ahead and just buy a few, just buy 4 or 5, nothing too crazy, because that earning potential going back to where we were, that is greedy. It doesn't matter if it's again $20, $25, $15. That earning potential is insane at all of those price points. AMC stock down almost 8%. We're under $5 a share again. Earlier this week, Amazon put out a news article saying that they were looking at buying AMC. And I put a video out about it. I think it is smart for Amazon to think about doing it with their Amazon TV, being able to do like a TV plus movies, have all Amazon movies premiere at AMC. That way, anybody with the Amazon Plus account or Amazon TV account can go preview those movies first at AMC theaters. Anything like that. Amazon's also gone ahead and they bought other companies before. They bought what was it, Whole Foods a couple years ago. They're starting their own airlines. Amazon is really growing, and I think Amazon buying AMC is possibly a very, very good move. But we're down 8%. If we look for the 5-day, we had this one day here, May 8th, where it just spiked up almost 60%. At one point, it was up over 70%, I do believe, just off the thought that Amazon could buy them, and now we're back down another 26%. So I'm not sure where it stands then with Amazon buying out AMC theaters, but it's still looking like it's a real possibility. And when that happens, we're going to see a spike again like we have never seen. And if we go back to that 6 month, by the way, we're up here before everything happened, $7, $8, and we hit up in the fives. We were pretty dang close. And if you were one of the lucky people that bought it down here 208, this was, by the way, 208, the day that AMC spoke about possibly having to file for bankruptcy till they got a little bit more money. If you bought it at 208, sold it there when Amazon thought about buying it, you would have made some crazy returns. And that's some good money. That's 150% profit right there. You cannot beat that. But I think there's possibly more to go. I think if Amazon gets into AMC and gets into other businesses, the growth you'll see on this stock like you've never seen. Though we do need to talk as well. If Amazon does buy out AMC, you won't probably keep AMC stock. It'll probably transfer it over to Amazon at a specific rate that they settle at, or Amazon can just give you a cash buyout, basically. Last but not least on the stocks I want to talk about is Save. We talked about Spirit Airlines. I also spoke about them in a video. They're down 15% today, down to 804. Again, if we look at that 6 month, we're finding new lows, like substantial new lows. We talked about how I think low-cost carriers, even fairly high-cost carriers, can truly make an income. This is back to United Airlines as well. I really do want to make a video about the economics behind this. There's a really good one put out, though, so I don't really know if it's worth my time. I might just link that video below. But these small carrier airlines, with how pilot contracts are set up, pilots are getting paid a base amount of hours right now, no matter if they're flying or not. So making your pilots fly a little bit really doesn't cause any true extra costs. And with fuel costs being as low as they are, all of these airlines, small, medium, large, can cut losses by turning their planes into cargoes. They take the seats out. Now, they can't hold nearly as much. Let's talk 737s. We all know what a 737 is. It's just your basic, looks like this airplane. Cargo version of it has no interior, no sound deadening, no nothing. It's just a metal tube in the sky. I believe read it can hold somewhere around 140,000 pounds worth of cargo before it takes off. A airline version of it with all the seats, sound deadening, lights, everything can only hold about 40,000. So it really isn't a form to really make profit, but it's a good way to cut loss, keep the plane in the skies, keep people employed a little longer, do good things. I think companies like Spirit really need to look at that. I am a little worried about Spirit though. Again, cutting new lows here, which is good for the potential upside. But we do have to talk about, as things get back to normal, every single airline for a while is going to become the budget airline. So when airlines become the same price, more or less, are you going to want to fly Southwest, United, American, or are you going to want to fly Spirit? Let's be real. If flights are the same cost, I'm not flying Spirit. And I don't think really anybody is. You know, we're hopping on Southwest, we're hopping on American, we're hopping on United, we're hopping on the good ones with good customer service, good planes, and good track records. Um, that's just my 10 cents. Anyways, that's all I really have to go over for right now. You know, there's some great potential out there in the marketplace right now if you're willing to withhold the storm. If you believe in America, you're never going to fail, right? All of these companies, some of them are going to make it. There's probably going to be a few companies in everyone's portfolio that never come back to where they should. And that's okay. That's part of diversification. That's part of dollar cost averaging. Again, going over that. If we go back to Norwegian Cruise Lines, this is a great example of it. If we look at Norwegian, we had a lot of ups and a lot of downs. Every day it's down. Every day you believe in the company still. Buy a couple of the shares when they're on sale. That's all I'm saying. You know, I really do believe in Norwegian myself, so I'm heavily putting money into it. United, I heavily believe in United. AMC, you know, this is a gamble. You know, every once and again, you gotta have some of those companies that you're like, man, I don't really know if I believe in what AMC is doing themselves, but companies like Amazon going in really changed the game. You know, seeing that AMC is open to being bought out, seeing that AMC is open to change, that is a good sign. That's all I have to go over today. Always remember, you know, do your own investment advice, do your own research, come up with your own opinions. Don't just listen to some guy on the internet. We don't want to be responsible for you losing money, but we do want to help you out with gaining money. Sometimes in the stock investment, as we've seen today, there's big risks with losing money. So make sure to do your own advice. Make sure to look things up, learn the market, buy companies that you know, buy industries you know. You know, I don't know anything about retail. I've never worked retail. I've never looked in retail. Honestly, I hate shopping. So it's not my thing, you know. I don't look into how Walmart's doing, how Kohl's is doing really. It just I don't understand how it works. And you should be the same. If you don't understand an industry, there's no point in investing in the industry because investing is truly just gambling. And it can be anywhere from just a pure all on red gamble, or it can be a highly educated gamble. And that's what we want. We want highly educated gambles where we understand what's going on in the marketplace. And that's why we do a lot of research before we just start spending money. Anyways, thanks for watching. Let me know your opinions below on what I've said, any stocks I need to be looking out for, anything like that. And have a great day.